everyone. Welcome back to yet another show or episode of Reinventing Finance with my lovely co-host, Tom. Tom, how are you today?
Thank you very much, my dear.
And with my dear friend, is Gilad a international way? How do you pronounce your name, Gilad?
So I think that you actually got it. I'm surprised. I'm positively surprised. I appreciate that you've been practicing in front of the mirror, pronouncing my name over and over.
I have. I've done my hair and everything.
I appreciate it, Yeah, it's like, whew, between pronouncing Gilad or Gilead, which will be the English biblical kind of way to say that. Gilad works. I will respond better to Gilad. Yeah.
Gilad, it's a pleasure to see you again. It was even more of a pleasure meeting you after a couple of years where we only met virtually in Munich a couple of weeks ago at DIA. And thank you so much for taking the time and taking some of the, as we've previously discussed before we press record, some of the, let's say, little boys gossiping about insurance and bringing.
Of course, yes. And by the way, I think that you're absolutely correct. They are going to do amazing, and those guys are going to fail tremendously. But who they are, we'll keep it between us.
Exactly. Yes. But for the few of our listeners, especially this side of the pond, maybe do you want to briefly introduce yourself? Who are you? And what is InsurTech LA?
Sure. That's a great question. Like, tell me about yourself for an interview, which in a sense it is.
It's an interrogation. We gave you the memo.
It's interrogation. Yes. Oh, brilliant. I love a German and the Dutch interview in Israeli. That can be a great beginning of a joke. Now, besides that stuff, walking into a bar and ordering a drink. And so, allow me to introduce myself. My name is Gilad Shai. I've been running InsurTech Los Angeles for the past 6-7 years, and basically it started as a meetup. Back then, so 2015 or 16, I joined the insurance industry. I joined Farmers Insurance. So here in Europe, people will know it as, that entity of Zurich. Yes. I think nowadays it's at $28 billion. Not really sure where they stand in terms of direct return premium. So I was there for 3.5 years. But once you get into insurance, you go like, holy shit, I can't believe that they're doing this stuff this way and for so many years. And as a serial entrepreneur, I started, first of all, I will need co-conspirators one day when I will start my next startup. So I started InsurTech Los Angeles as a meetup because you need to educate people that there is insurance. Who is going out? Yes, I'm the founder of an InsurTech company. Today, yes. However, 7 years ago, you hardly heard about them. And a year later, of course, there was I would call it the patient zero of InsurTech, Lemonade, and Hippo and all the rest of them started to pop up like mushrooms after the rain. And with that, of course, there was this, I would say, earthquake that we see more and more in InsurTech and innovation in the insurance industry. So I was with Farmer for 3.5 years, co-authored the book of that Sabine van der Linden edited. So I'm one of the co-authors. I left Farmers after 3.5 years to start Bound API. That was one of the first, if not the first, embedded insurance platform. The whole concept was, how can we provide insurance at digital touchpoints? And of course, it had all kinds of internal pivots, same technology, just a different brand name. A different value proposition and a different champion within the different organization. Sadly, COVID killed us in terms of where we stood and all the budgets that magically disappeared. And I decided to shift into what we call investment. Now, Needless to say that thanks to my activities and let's call it high profile in the industry, I've been a media partner for the big conferences in the industry. I would say I know one or two people in the industry, and also have been part of the organizer side of the various conferences. What else can I tell you? I think that's enough. Most likely other things will pop up as you go through the
as we go through the questions that haven't been sent. So we'll get this we'll get this raw and unedited. So I would say that you do have a pretty holistic view about, you know, that beast that is InsurTech and what it set out to do and whichever wave we're in, and, you know, what's successful and what wasn't, you know, from, as you've said, working in incumbent insurer, starting your own startup, being a networker, a investor, going to lots of conferences. So you probably are one of the few people with at least a broad view and broad angles added.
Yes.
From your, you know, and you can start wherever you think is sensible, but what did you learn? Or to put it differently, what things have been falsified and what things or thoughts or hypotheses have been validated over the past, I don't know, 5-7 years that you've been in these various roles?
Wow. We need to be a little bit more specific with examples, because whatever I thought yesterday, most likely I will not remember today, and there is a good chance
it's recorded.
that I will
that's fine. It'll be recorded, criticized, dissected, and shoved back into your face. So don't worry about it.
That's wonderful.
We'll get this back up to your attention.
I didn't know that you have so many followers that, you know, we need like to get you the blue icon that Elon Musk now is making everyone buy. But it's only $8. It's fine. $5. It's stronger than the euro, but that's between us. So I think that the main thing was insurance agents. And that was at the beginning, we saw it, I don't know, what was it, wave 2 or wave 1 of the InsurTech startups. They all, we don't need agents. We just go directly to the customer. And it didn't work. And that's the beauty of it. Even when, I think that the first thing that I recognize with Bound, and I really thankful for growing an education, let's call it my education at Farmers Insurance, that it was agent oriented, right? And it's also, that's the distribution channel. To sell insurance, you need someone, a professional that will sell you insurance, especially if it's something more complicated. Car insurance, sure, it's a commodity. Most of rent insurance, most of the home insurance, it's commodity. However, once you move a little bit to the left, or you need something that is a little bit more complicated for your business, talk to an agent. They will give you the right advice. Now, when you think about it in the US, there are about 20,000 people who work as insurance agents. Same number, if not triple than that in Japan, in Brazil. I don't know what are the numbers in Germany if it's broker agent dominant. But at the end of the day, you cannot ignore that amount of and the industry that is pushing the entire policies forward. So for me, it was, do not try to intermediary the agents. On the contrary, it's a workforce, it's a buying power. Invest in them, build tools that you can make them even better. And it's such a great opportunity now that we see the boomers, right? Who are the majority of the insurance agents in the US that are starting to retire, to sell their agencies because there is no second generation that will pick it up. There are a few, right? But the majority don't. So they are looking into selling them. And the young kids who Generation Z or a millennial. No, millennial are at their almost 40. Generation Z who will go into the insurance space. So there are all kinds of interesting opportunities now to sell them technology or to buy and to create cluster and mega agencies that will, but I'm already talking about different facets of that entire ecosystem.
Is there, before Tom and I decide whether we want to dig in and maybe challenge some or corroborate some of these viewpoints, is there another
Listen,
learning?
I think that there is another thing that from time to time, if I, like now, dive into the rabbit hole, pull me out, because you started about lesson and I was already talking about merger and acquisition of an agency.
Absolutely, and that's a very interesting topic, to be honest, especially on the US part, because agency roll-ups, PE-driven agency roll-ups is much more established than it is over here, in Germany at least. But
Nick, aren't you a third generation insurance agent or fourth generation?
No, second. I would have been second generation. My father had an MGA for classic cars in the US. It's a small version of Hagerty. It would have been a small version of Hagerty, but we did sell to our main underwriter. A couple of people. Well, my dad did, not me. But learning one, we still need agents, so invest in enabling them.
Yeah.
What any other learnings that are of equal footing?
Yeah, of course. Listen, there are many different things that we look at them as, someone tried to coin it, the InsurTech wave 1, 2, 3, 4, 5, or whatever that. I don't remember the different waves, but it started with, and let's ignore Lemonade and Hippo, and we'll actually can come back to them about valuation. That will be lesson number 3, right? So we are looking at the different waves of styles or trends of InsurTechs that popped up. It started from aggregators to going direct, to doing this, to doing that. At the end of the day, patience is a key role here, while you need, at the same time, you need to be active. So there is a lot of FOMO. You need to know how to control it. You need to participate in the party, but you also need to be smart enough to have dry powder for investments and other things, because that's opportunity. And, when I'm talking, so I know that I made the introduction, but the important part nowadays, and people ask me all the time, Gilad, what do you do? So, and I give them the same answer. I advise and invest in InsurTech startups. That's my main focus. This is how I buy my wine and pay for whatever. So when we look at the different opportunities and how, and I completely lost my line of thought now, which is amazing. So in terms of the different ways, we saw the aggregator, we saw the different MGAs, the AIs. Now we have the embedded insurance, which always give me a small cringe. Twist in the heart, not cringe. We have all of those guys. At the end of the day, you need a lot of patience and understand where it is part of your portfolio. If you're an insurance company, you have a CVC, or you are practicing what insurance companies been doing for decades, and their natural growth is by acquiring another company's book of business. This is how most of the big insurance companies been growing, right? Unless they are throwing $2 billion at a Gecko. You need to have that patience, but also participate, so you can have a steering ability for what's going on in the ecosystem. That's one thing. And it's very hard because we are always in the grass, and it's very hard, too many woods, and it's hard to see too many trees. It's hard to see the forest kind of thing. So that will be one. The other thing that most of the people like to talk about is the valuation, right? And we've seen most of the startups that went public. So Keen pulled it out. They didn't go in. Now, I think that recently I read that they raised another debt a financing round so they can continue without going and doing equity. How can I say that? It was wrong valuation. People lost a lot of money. People made a lot of money. And this other investor made, especially the early investor made a lot of money. There've been all kinds of lessons learned from it. And part of it, you need to understand that if you're an insurance company, you will be valued as an insurance company. You are not a technology company that sells insurance. You're an insurance company that ideally have better technology that will give you a better combined ratio, or your loss ratio will be better because you are more efficient, less employees, or your expenses are, well, basically less than the other, and hopefully you have better underwriting capabilities. Yeah, I would say those are the main three.
Tom, what do you think? Do we want to dig in or let him off the hook on these 3 lessons?
Go for it. Come on.
Tom, why don't you strike the first blow?
I like the kind of nuanced attitude to the whole industry. So what you often have is that it's the kind of black and white discussion. So you have people coming into this insurance industry. They call themselves InsurTech, and they just say in general, all those incumbents, how do they still exist? We will disrupt them in an extreme fast way. And then in reality, it's different. So you have this, on the one hand, you have this distribution channels, which are not so disrupted so easily and so fast as, let's say, people who find themselves very digital think it would happen, but it's the same and same over again if you talk about innovation. And on the other hand, people find out that it's much more complicated. So if you talk about loss ratios, underwriting, compliance, you also see exactly the same in fintech. So if you see, for instance, the neobanks, they always say, I don't understand why the banks are so lazy and so bureaucratic. And then they find out that data privacy is a topic, that whitewashing is a topic, that regulation is a topic, etc., etc. And then they find out, it was more complicated than we thought at the starting point. So I like until now your nuanced way of, for instance, talking about distribution. So. Go ahead.
I think
that
you're absolutely correct. Yeah, Tom, you're absolutely correct, and that's the point, because there is a big, a few digits big difference between, I'm a startup that bootstrapped, or an angel gave me, I don't know, $500,000 and now I'm doing something, versus a multi-billion-dollar company that need to, if it's private or public, it doesn't matter, that need to take care of millions of households and policyholders. The risk is, you cannot even compare, and we need to understand. And one of the things, and if we are talking about the lesson learned, let's add it at number 4, right? And basically, Tom just framed it in a different way. There was an aha moment that we don't see kids out of college or entrepreneurs that are going, I made a killing in this industry. I'll put the same concept and I'm going to disrupt the insurance industry, right? That was a little bit of the naivete that we've seen in the wave 1, wave 2 of the InsurTech startups. I met here in London a startup who is out of school. They have like 2-3 years out of college experience, and they're trying to build an insurance product. And their first question is like, can you introduce us to someone who is a veteran in the insurance space? Because they already understand that while they have all the, how we call it, whistles and all the stripes and all the bling, in order to make the cool technology and an amazing UI, they need the insurance veteran that will connect it to the reality, because there are so many different things here. And insurance industry is still relationship based. So you need to know, you need to be in the space for a few good years, not just to establish your relationship, but also to understand how the industry operates. because it's a global industry. Although the maker of insurance is here in London, again, visiting. I'm based in Los Angeles. But yeah, it's that aha moment, I think, that sunk down.
But there's also another very, very big difference if you compare this with other industries. That the fact is, what I think you can't underestimate as much as possible is the fact that you have a big client base which is there.
Mm-hmm.
It's not like let's say buying a new skirt or shoes or something like something like that. So also, if you would have to build up this whole client base, it takes years and years and years. And so it's a very slow industry. So it's slow building it up, but it's also slow ruining, let's say, your whole company. And that's something which is typical for especially insurances, because it's a low interest product. So let's say if somebody has built up 100,000 people who has a home insurance, it's not so easy to build up 100,000 home insurances. And that's something which this whole idea of slow versus very fast is for people who are very fast and think that the whole world in all dimensions is very fast, is a kind of confrontation with reality, because it's just a different speed. It doesn't move at all. It's like a big concrete block, a Zurich or an AXA or an Allianz. I mean, you can criticize their websites and you can criticize their software and you can criticize their legacy and you can criticize the fact that they are nationally oriented, etc. But they have just an enormous amount of clients and they just don't move from one state to the other because they're just not interested.
Absolutely, because it's the brand placement, brand recognition, building a brand that you can trust is critical. And it takes years to build it. And this is why you have insurance companies, the incumbents, that will sponsor and do brand placement almost everywhere. If in the US, it will be on NASCAR cars, not just F1 or golf tournaments. It will be on NASCAR. It will be on your local baseball, football stadium, or wherever they can. High school. There are places that high school sports in the US, it's like religion, right? So if their brand is there, they will pay good money to have their brand there. Why? Because over the years, you grow up, you go to daddy, which insurance should I buy? That insurance, because I've been in that insurance, and that's most likely what you buy. You see the USAA, you see Allstate, you see Farmers, State Farm. You know those brands, you trust them, and when shit hit the fans and you need them, they may or may not be there for you, but you think that you can trust them. Now, a new kid coming in, it's like, okay, how do I penetrate the market that I need to put my brand in, and how do I build trust so people will trust my brand and will buy? So usually they're going for the tabula rasa, or people with no previous experience or that are not familiar or don't have that emotional connection to those familiar brands. It's like, asking, hey, do you drink Pepsi or do you drink Coca-Cola? What do you feel? There used to be RC Cola. I don't know what happened to that one. But, what is your emotional, and do you trust that kind of Coke that will give you, I don't know, the sugar craving that you need? Now, disclaimer, I don't drink sodas, so it doesn't matter.
I think I agree with all of what you've said. I would maybe put an additional lens to it, because from this conversation I'm hearing, it's almost like, insurers have blocked out the market, they don't move, they have all this brand, and they're not letting other people in for the benefit of the customer. I don't think that's true. I think where it would, and me included, what I've in the beginning thought that I've mistook user interface or user UI versus user experience, and I feel that insurance, there's natural touch points when you do insurance, and everyone sales agent knows this, right? You rent your new house, you're in a job, you get married, blah blah blah. There's 5, 6, you travel, you buy a car. There's natural touch points. These are not day to day. So even if it's and it's complicated, it's a nuisance. It's like tax, and an easy way for lots of people to deal with that issue is to go to someone or some brand, because that's ultimately what a brand does. A brand does reduce complexity, and I go, I don't know whether it's the best product. I just buy Apple, for example. I get the whole discussion about Ubuntu and all that, and I just don't care. It's just, I do not want to, I just go, it's good. I know it's expensive, but it works. That's how much I want to do. That's my kind of customer. And I think within insurance, because it's low interest, etc., that goes even further. There's fine print. So relationships, brands, reduce complexity. And I think what you see now working is people who start with the premise of not product-led, but distribution-led, and basically say, let's pick up the customer where he or she already is, within a preference or a channel, and that can be a person that they already trust. And let's work backwards from there, and let's inject efficiency into that. Those things seem to be working, and most of the money for that are fundraised usually go into distribution rather than actual product development on the kind of classical sense. And it's expensive to break someone out of that cycle, and we're now experiencing that.
And that's the point, that as an InsurTech, as a startup, this is where you need to be super creative. And I was just, as you said, putting a lens on what Tom said earlier, that the industry moves slowly, right? And big giants that worth hundreds of millions or billions, and the marketing budget for a few of the top 10 or the top 20 in the US, their marketing budget is $1 billion. And for them, it's all about, okay, can we make sure that we are not choking. They are not choking. It's not that they can defend everything in terms of the market from new brands to enter, but they are big, right? There are all kinds of ways to do it. So for the InsurTechs, for the startups, if it's, we talked about the smaller or bigger startups in Europe earlier, they need to be creative. And they need to play more or less the same game, trying to build their brand, but at the same time, to be very creative about how they can do that. But,
let's segue into that.
Sounds good.
What successful good artists steal, after all. What good creative, let's start with distribution, go-to-market things, have you seen that you would like, that you think, people should have a look at?
I'm not sure. Repeat that again.
So have you seen any creative ways to get customers within any particular in InsurTech, whichever channel, that could act as a nudge or a case study for someone to have a look?
Good question. I don't have a good answer from the top of my head. Seriously. Okay. So let me try to give a very genetic answer that's not really going to answer your specific question. Let's differentiate between a technology company and an MGA or an InsurTech that sells insurance, right? For both of them, because in insurance, everyone is a frenemy. So even if you're selling your own product, you will find a way to send a lead if it doesn't meet the risk appetite, or to bundle things together with one of your competitors. At the end of the day, we are all friends and we are all competitors. So, and we've seen it over and over again, or even on the technology side. There are many startups technology that will work with Guidewire and with other course system and other. Why? Because there are all kinds of opportunities. If it's not me, it may be you, it may be you, and they're all sharing that. And nowadays, and I know it's not answering your specific question, I haven't seen something that is like, oh my God, I can't believe what a brilliant distribution channel they created, or a customer experience. And the main thing is the customer experience, right? And that's where the whole embedded insurance concept started. How do we make the insurance as integral part of the product or the service, or basically the capital risk that we are taking as people or as a business when we want to do something specific? So yeah, it's a little bit hard for me. Let's say I'm looking now at a new MGA, early stage, and the main reason I'm looking at them is because they already have a partnership with a specific distribution channel. So they are doing rent insurance, and they're already embedded as part of the system that helps to manage those apartments. So they are there. Like the only thing that you need to do is click a button and that's it. You're covered, right? And that's classic embedded insurance with a distribution channel that will give you also a defensible position in the market. Yeah, no, I don't really have a good example for your original question. Sorry.
Tom, does any come to mind on your end?
I'm just still thinking about, let's say, innovation in this whole space. So I think there are, let's say, there are two different types. On the one hand, you had this whole B2C, let's say, startups, and I think that has become pretty difficult. That's a topic we discussed until now. And the other thing is, you have this business to business, let's say, startups who just make the industry, let's say, much more efficient because they have, let's say, certain AI inventions on let's say, dealing with your claims in a more efficient way, etc. And I think this a huge difference. And I think, let's say, for the second part, that makes sense because, let's say, from the cost side, you're just saying also to this big incumbents, you're saving money if you would do this more efficiently, like let's say all bought computers in all industries, etc. And I think the big problem still is this B2C. So I'm very curious if you just have from your own experience, let's say, some really good examples where in the long term those start or scale ups really survived, because we also have seen some quite successes. And if you then have a look at the combined ratio, it will be pretty difficult, but they were just successful between brackets because there was so much money around, and that's on the long term not enough. So it has to be a sustainable business.
So we can start by, most startups are going to fail, right? I think it's 9 out of 10 will fail or something like that, or 6. It really depends on which stage, including my previous startup. There was a clear financial decision. It's like, okay, how much can we keep it alive after COVID started and all the budget that we were pure technology company, right? The API mapping, embedding the insurance, making all the affiliations, At the end of the day, everyone panicked and engineered themselves out of a job. That's mainly the innovation teams. And actually, now I have an idea for your previous question. Startups are going to fail. And great, with all my going about the different thoughts and now remembering, Tom, can you just repeat your question? What was it?
I was just wondering, let's say, if you have from those business to consumer and business to business, what let's say are your most, let's say, best examples or your lessons learned? Just to take one example, Nick and I often mention is, for instance, Stephen Mendel, who did this pet insurance, which is, that's probably for a B2C InsurTech, one of the best examples, because it was very focused. They had a better product, they had better combined ratio, and they focused then on a global scale, or at least trying to scale on a global scale on this very specific pet segment. So, but perhaps because you are an investor and you see so many InsurTech companies, I'm curious if you could mention, let's say, one or two of those examples from those different sectors.
Let me actually tie it to previous question that you talked about, actually from the branding standpoint. I have nothing to do with that company, and they pulled it off a few years ago. So, Ethos Life. There was a point that, and I hope that I'm right about those statistics, so I'll talk high level. They basically done a very smart thing, took most of the money that they raised, gave it to Google, and basically generate so many leads and sold so many policies. And that's it's secondhand. I don't know the fact, so take it with a grain of salt. And basically, they just ran out of capacity, and then they moved and they got new capacity. I think it was from legal and no, what's the name?
In general?
Something in legal.
Legal in general?
Thank you very much. This is just the state of my memory today. Amazing. And so, and that was a bigger, I think that they ran out capacity from RJX and then they moved to other one, but I'm sorry, take it, not really sure about the name. But as a startup, it's a ballsy move. And you can see that that's something that in a regular insurance company, you cannot do. And it was a very smart move from them. They sold, I think back then they sold only term life insurance. So the thing that you can underwrite and sell online, 10 years term life. Very simple. But that was classic thing, not classic, we can call it a classic move in terms of how can I penetrate a new market that it's very hard to get. Take money, give to Google, and make it happen. Now, having said that, most investors, if you will hear such a move, and it's like, you want to tell me that if I'm going to invest in you, let's assume $5 million, you're going to take $1 million and just give it to Google for ads. Actually, it's for leads. It's not that you give it. You buy ads. At the end of the day, you want to see that the conversion of those ads and the money will turn into lead. However, it created enough impact that for them, it gave them all they need, including the fact that they completed their capacity and they moved to the next league in terms of operation, right? So that's a, I would say, ballsy move that it's very hard sometimes to digest. Another startup that it's very interesting, and I'm an advisory for them, Insurance Gig, and they are still very, very early stage. And what I like in terms of their pivoting and different experiments, they are sort of the Zapier of insurance. So creating automation between different stages. So basically, instead of buying one big license for tens, if not hundreds of thousands of dollars, it narrows it down to now it's transactional. So they're opening a new blue ocean that agents can buy technology. And the point was that they are working with many players in the industry, if it's Hawksoft, if it's different AMSs, and their value proposition, they are a layer on top of a layer on top of a layer, but they are automating that workflow, doing a little bit of disruption on how you pay for the technology providers. And there was a point that a customer voice came out, and it was so simple. And that's tying it back to user experience. All that background for one thing. A button as a Chrome extension. That's it. So instead of your agent, your producer, will type in, there is a small button as a Chrome extension that does all the auto population for you. You press it, it will cost you $1, It will auto-populate all the information that you need with data enrichment. It will pay the data enrichment company. It will do that for you. And now you saved an hour of typing and making mistakes. Boom. Very simple. Now they are working on many other things, but when we are thinking about user experience, that's a perfect example of how one company, one new startup, super early stage, working with a couple of mature startups and incumbents, technology service providers, and bringing them all together. I had that experience with Bound on risk providers, but that's a story that we should not tell. I know I didn't answer your question directly, and I gave example for previous one, but roll with me here.
No, listen, I think it's I think it's fine, and there's a few things on my mind, and I'll put them in the comments, and then we can kind of further that, because there's a couple of other questions. But at the end of the day, where it kind of comes down to is design for whatever distribution access you can go for, right? That's the outside in, whilst everyone usually started with, this is a direct to consumer self-service product, it needs to be, but that's not actually what anyone was looking for most people. So I think it's start with that, co-develop these products with your distribution partners, because world is littered with unused InsurTech products, insurance products, and everyone these days has a platform, but if you don't have any users or customers on it, no one really gives a damn.
Yeah, and that's the biggest challenge when you look at ecosystem, right? Every big core system trying to create their ecosystem, but that's not their DNA. They don't know how to manage an ecosystem. So most likely it will fail, or it will be, okay, we created a plugin for so-and-so core system, but and is there a use case? Is there a economic reason for that? Or is it just for marketing? If it's for marketing, fine, no problem. You can add, we have a plugin on this and this platform, and you can use it, but how do you onboard? Do you take into consideration the training, the education, making sure that people know how to use it? And what's the cost of maintenance, right? So yeah, sorry, man.
No, that's, so just kind of conscious of time, I'd like to dig into one topic, and if we have a little bit more time, we can dissect some others. But let's talk it. Sustainable insurance. I prefer, there's a German term called enkelfähig, which direct translation means grandchildren ready. But have you found any examples within insurance or supported by insurers, invested by an insurers, where you say, you know what, this is something that one can be proud of. This is something that you might actually tell your grandchildren if you were said insurance executive, to say, I've done this. Without me, X wouldn't have happened, rather than, I don't know, here's an ESG report, go nuts. I don't even know whether, or maybe start with, is sustainable insurance, which in the European Union with ESG investment criteria is regulatorily enforced from the asset management side quite a lot as well. Is this even a thing in the United States?
Great question that I don't have a good answer to. So let's start with that. So you always ask, you started with impact, personal impact. And I'm trying to think, what did I do that created some sort of an impact, right? I had a few applications that were, featured on Apple. I was the product engineer for the first, for Duke Core 2 small factor when I was with Intel, and the first quad core. Was that a real impact? Yes and no. It helped. It made the life very happy for many gamers in 2005 or 2006, maybe that back then. But was there an impact? Now, going to the ESG. Sorry, go ahead.
Yeah, what I meant was, kind of imagine I wasn't kind of going, what have you done? I was, and sorry I was like, do you have good examples within the insurance or InsurTech space where you feel whatever said company InsurTech is doing is getting us onto the right path towards a more sustainable economy and society? Do you have some examples so one can compare and contrast on their own, on one's own efforts?
So here's the thing. I started with that and I was just about to jump to the ESG because this is what it's still uncertain how that's coming to impact our day-to-day life. And I've been on the road for the past 7 weeks, and Saturday finally I'm heading back to Los Angeles. I've been here in London for 5 plus the week in Munich that we met. And there are 2 new things that I started to focus on. One, quantum computing. Got super excited about it, and I'm trying to allocate an hour from time to time to do better research to understand what quantum computing actually means and when it will become a thing, because you already can get it as a service. And the other thing is ESG. Now, when we talk about ESG, many will think about climate, sustainability, all that stuff, and insurance can play a big role there. Now, have I seen something that dropped my jaw? Not really. But I think that insurance has a big role to play. It's insurance and finance, and mainly in terms of making sure that projects are not a risk. So hedge the risk of going through all kinds of different projects. That means. So what does it mean? It means if you are talking about sustainability, governance, or environment, it's all about, do you have the right software to monitor it? Is there good standards for the carbon footprint within your company, and can you actually create that report? Do you have enough exchanges to deal with the carbon offsetting? And those are small measures. Now, when you think about sustainability, and if you are now going to take some thought, going out to do a project, how do you ensure that project of, for example, and there is a nice MGA out from Boston, Energetic Insurance, that they will provide, I'm not sure if it's an insurance or if a legal, a financial service, James, I need to check.
Or forward or something.
Basically,
like
at the end of the day, you want to make sure that if you take, for example, if you take a loan again to, to do a solar panel, a project, you want to make sure that you can insure that loan. I know it's silly, but when we are merging insurance and finance, and you take debt in order to execute on energy sustainability or anything like that, you want to make sure that there are programs, insurance programs, to make sure that that loan will be in place, and that will secure and will actually create better incentives, or let's call it peace of mind for the finance, for the lenders, to put more money into additional projects. So that's one example. Then, of course, you have, and in the US, it really depends if it's admitted or not admitted, or if they want to put it on the legal regulations. So it will be, okay, what happens if you are breaking the compliance in terms of whatever will come, all kinds of compliance regarding pollution and stuff like that. Maybe soon enough we will need to be compliant as an individual, not just as a company, right? My car, I'm driving a Jeep. It's 7 years old now, so every year I need to take a smog test because California. I hardly driven it, so it doesn't matter. But what happens if now I'm becoming a polluter, right? And I'm not talking about what happened with, what was it, Volkswagen, who fixed that thing and cost them half of the company to pay fines. That's type of something that you need to have an insurance for, not for the liability, but for the legal fees if you are going to break the compliance. And of course, they're going to have so many exclusions. I'm sure if you knew it, you didn't know it, etc., etc., etc. So with all saying all of that, I haven't seen something very specific that, oh my God, this is going to be the next thing. However, this is the same thing with quantum computing. I think that that's next in terms of where the population and we are trying to push things forward. Of course, having said that, given the war in the Ukraine, everything is on hold. Why? Because it's cold in the winter and people want to get warm. So how they are going to get that energy? They need that energy. But when we are looking 5 years, 10 years forward, we need to find and start building those solutions and to make sure that they are in place. I hope that was a better answer.
Absolutely. I mean, it's a developing field, and I have not found the one blockbuster idea, but quite frankly, I think that is to be expected, because there isn't this one thing. I think it's success by 1,000 cuts. So for me, I just kind of try to collate some best practices, because at the end of the day, there is a part of collective activism, corporate citizen activism, that also plays its part, rather than just kind of going, I'll move if I have to. Conscious of time.
How much time do we have?
Not that much. So we are so I would, our audience consists of insurance and InsurTech enthusiasts, largely out of Europe, some in the US. But is there anything that our audience is for you? Is there any type of listener that you'd say, listen, these are the topics on top of what I've discussed, or, just in summary, that, reach out to me. I'd love to discuss anything, any last shout out that you want to give?
Well, listen, we can continue talking about, as you know, we can continue talking about so many different topics. I think that the thing that gets me excited nowadays, beside apparently I'm an investment banker. So I started to look into larger deals and mergers and acquisitions and stuff like that. So that's a new field for me. But the main thing that gets me really excited is now I find a way to collaborate with InsurTech Israel. So usually people confuse me for being in InsurTech Israel. I'm not. I'm an Israeli who lives in Los Angeles and running InsurTech Los Angeles. And one of the things that we are now focusing on, things that we used to be, we are doing separately, but finally we are trying to do that together. And that's basically to bring small groups of insurance companies, investors, service providers that want to discover the center of innovation in Tel Aviv. So it's what we call a white glove, pick you up from the airport, 4 days of full agenda, sightseeing, food, and a lot of meetings that are about building a relationship and digging deep. Now, you know it very well, and as a media partner to the big conferences, we go to a big conference, there are thousands of people. We have one of those applications, we have 15 minutes, and then we meet someone random on the queue to the bar. We have 15 minutes. Hi, what's your name? Let me take a screenshot of your badge. And we may or may not talk in a month or two. Well, this is more about, let's go on a walking tour in the old city of Jerusalem together and build the experience. Let's share a dinner. And it's all about the agenda of what they need today, right? So these are the companies that the insurance company wants to meet. These are their goals for the next 5 years. So we can curate those meetings. And of course, we're also always adding, and that's what I like, and people don't really understand that, meeting other insurance companies, right? Because it can be carriers, 5 people from Germany to people from England and 10 from the US, from different companies. And then they are going to meet insurance companies, the CIO, the CTO, whatever, VP of innovation of an insurance company in Israel. And because there is no direct competition, you finally have an opportunity to sit with your peer and talk about, so how are you doing it? What's your problem? You know, when I was at Farmers, it was always, you know, because it's such a big organization, I was always trying to figure out who else is in this organization that I can talk to understand better things so we can collaborate. What are their problems? Maybe we have the same problem. Maybe something we can push forward. And then when I used to go to conferences, I was looking for my peers in State Farm, in Allstate, and Progressive, and talk with them to see, do we have the same experience so we can sort of share. Now, many people are very competitive and so afraid and siloed in this industry. Sometimes it drives you crazy because they are missing so much of being so guarded. And this is the opportunity, because you're not competing. Although, as I said earlier, we are all frenemies and work, but you're always working with your competitor. So we have a few companies that sign up that, funny enough, they are looking to meet the MGAs while they are babies, right? Israel is a core of innovation, startup nation. However, there is no market. So what do when they grow up from that incubation? They go to Europe. They go to the US. That's where the market is. If they are an MGA or if they are a technology, the next cyber security, cyber insurance, MI, ML, throw in the latest buzz, which will make me cringe. By the way, Tom, if earlier we talked about different buzzwords and trends, AI is there. I don't care. The AI, I don't care if you run a linear regression. The box, I want to see the business result. That side note. So yeah, that's basically one of the things that keeps me very, very intrigued with the industry nowadays. And again, and people ask me, why do you do all this stuff? Because it helps, it creates relationship, and that's what I do. It's all about the relationships, because later on, it gives me a better opportunity to provide value as an investor or as a connector, or, you know, I may gain from it or no. Maybe later on in 2, 3, 4 years, say, oh, you know, let's talk to Gilad. He knows someone, and maybe they boom.
Awesome.
That's it. Yeah.
Gilad, thank you so much for your time. Do share, you know, once we post this, do share the information in the show notes so people can check it out. And it was a pleasure talking to you.
Always.
And I wish you some great remaining days in London and some safe travels back to California. And thank you so much for your time.
Thank you. It was a pleasure talking to you. And Tom, man, you need to let us breathe a little bit, man. You talked so much.
Yeah,
that's Tom. That's Tom.
Incredible. Looking forward to see you on one of those next conferences again. And we'll put a lot of hashtags InsurTech Israel on the post, so everything will be fine.
Hey,
and then
InsurTech LA, man. I got Kobe already. Like, hey, why InsurTech Israel? It's like,
perhaps we should invite Kobe also to talk about the InsurTech ecosystem in Israel, and then we meet. And then we all meet in Tel Aviv.
Kobe's not a hard guy to get hold of. He's very, you know, we'll invite him. I'm sure he'll say yes.
I think that he just came back from the US from another roadshow with a few startups. So, and he will give him
some days. Give him a few days too.
Let him, you know, to take down. He must be in the desert now on those Polaris razors. I'll share with you pictures when he took me in Arizona to do that. It was awesome.
Okay.
So much fun. Okay, enough.
Enjoy your time in London. Bye-bye.
Gilad, take care. Thank you so much. Bye.
Everybody.